continue. So yeah, I want us to do question 3.10. Okay. And this won't take us long. Again, I want us to just focus on the actual number crunch. Can you see how we enter it into our books is not really changing? Okay. It's just, they're now just giving us different scenarios when it comes to this depreciation thing. That's all that's really happening. All right, and then if you use the timeline, then you can see what's going on, and then you just do your thing, do your calculations, and then you do the necessary entries. So let's jump into this and see what's actually going on over here. Okay, so under the required, it says prepare the following accounts in the general ledger of store-led dealers for the full year ended 31 August 2006. Okay, so they want us to do equipment, accumulated depreciation on equipment, asset disposal, debtors control, profit and loss, profit or loss on sale of equipment. That's in the general ledger. So all journal entries pertaining to the sale as well as the depreciation adjustment at the end of the financial year. Okay. Then the last bit they say show the effect of the 4 transactions on the accounting equation. Use the following format. Okay. So so I think these 4 transactions are pertaining to the asset disposal. But we'll check the answers on this. Okay. Because I think the accounting equation, we've done so many of these guys. You can't do the accounting equation at this stage. You've broken my heart. You really have. Okay. So up top it says the financial year of store-led dealers ends 31 August. Okay, so we're dealing with 31 August again. The following balances appear in the books. 1 September 2005. Okay, so we have equipment. That's all the equipment. They didn't need to write that in brackets, by the way. They didn't need to write all equipment. And accumulated depreciation, you should know that. Accumulated depreciation on equipment, 28,536. On February 2006, man, this is like a copy and paste of 3.9. On 28 February 2006, all computer equipment, and office computer bought on 1 September 2003 for 13,920 was sold. Okay, on credit to Puma dealers for 7,714. Credit invoice, so we know it was sold on credit. All right, R12. No other purchases or sales of equipment took place during the financial year ended 31 August 2006. It is the policy of the firm to depreciate all equipment at an annual rate of 20% on cost. Okay? Sometimes they won't even tell you straight line. They'll just say 20% on cost or 50%. Whatever percentage on cost. The moment you see on cost, you know that this is straight line. Okay? Because what they're saying is the actual cost that we bought it at, we don't need to do any you know, with the diminishing or reducing balance, we have to say minus depreciation. Anyway, let me not harp any longer. Then lastly, it says they ignore that. Okay. So let's get into this again. First thing that we want to do there is to build our timeline. Okay. So again, I like to start with, where are we ending? Okay, what is the end date? When is the end of our financial period? So 31 August. What year is that? Is it 2006 or 2007? 31 August 2006. Okay, cool. Right, that means that our financial year begins 1 September 2005. Okay, cool. And what do we know? At the beginning of that, we had equipment, the value of equipment or the cost of the equipment that we have. This is the cost when we bought this equipment. Okay, is, how much is that? 95,000. 120. Okay, and then the accumulated depreciation on this equipment. If only I could write that fast. Okay. Nah, my other PC that I was using last semester, I had a for the touchscreen. So yeah, so I'm still gonna get it back. It's just getting fixed right now. So that's why I actually just got an Apple because I was like, let's see what this life is all about. I get the hype. I get the hype. I think when it comes to Apple, and now we're totally sidetracking. But when it comes to Apple, it's the user experience. Like it's just appealing when you look at it, the interface. So yeah, I get why people like these things. Right. Cool. So we have that down for 1 September. Then what happened during the year? That's the next question we ask ourselves. Okay. 28 February, we bought. No. What does it say? We actually sold. Yeah, we sold on 28 February. We sold this computer on credit. Okay, no problem. And it tells us that we did not do anything else. We didn't buy or sell anything else. Okay, so that's the only thing we need to worry about here. And how much did we sell that for? So, thank you so much. 7,740. Right. Okay. Cool. So again, we find ourselves in a similar situation, right? We know we have to dispose of this asset on 28 February 2006. But here's the problem. They didn't tell us the depreciation that we've had on this asset, okay? So there's two calculations that we need to do here. We need to do the asset disposal on this one, asset that was sold, and then we also need to do the depreciation for the year on the remaining equipment that we had, okay? All right, but we can't touch the old equipment because remember we have to remove the cost of the, so actually we can do that now. So let me switch back to this right here. So because remember we're doing it on cost, so in other words on straight line depreciation. So to calculate the old depreciation for the financial year, we could quickly just say, let me just increase this one, yes. 3.10, yes. Correct? On cost, yes. We're working out the depreciation on the old assets. Remember, on the old equipment, because we only sold one, so we still have remaining equipment that we will have at 31 August 2006. Does that make sense? So that's what we're calculating to say what was the depreciation on those, on that equipment. So let me just quickly increase the font here. Okay, so old. So since we know it's on cost, we're saying, okay, what was the cost of all our equipment on 1 September 2005? And that's 95,120. Okay. And then they told us that this asset that we sold on 28 February, The cost of that when we bought it on 1 September 2003 was 13,000. Okay, 13,000, how much? 920. Okay. Now, this is why I was saying at first we can't do this calculation because my mind was still on reducing balance method. Because on reducing balance method, we would have had to also remove the accumulated depreciation on the asset that we sold. But fortunately, we are doing this on straight line, and we know it's just on cost. So literally all we're going to do here is then say times 20%. Okay. All right. 0.20. Okay. Which gives us what? What do we get? 1624. Oh, 240. Okay, cool. So now we have that. But now we need to also then calculate the necessary calculations for this asset disposal. So I think I'm just gonna scroll down here, and then we're gonna get to drawing again. So we can do the timeline for that asset that we are disposing of. So when did we buy this asset? So 193. And how much did we buy it for? I think that's at 13,000. 13,920. Okay, guys, I really need you guys to practice this stuff, just to make sure that you obviously are comfortable with it. I know also, like when we're doing exercises, there's some stuff that are filled in just to save us time, because otherwise we won't finish. But then obviously when you guys are doing your assignments, your tests or exams, you won't have any of that information. So I need you to have your mind actually wrestle to say, what am I supposed to be putting here? Why am I debiting here? Why am I crediting here? Etc, etc. Okay. Right. So please do that. Did I hit record here? Please. Oh, thank goodness. Cool. 31. 8. And this is 5. And then finally, we sold this asset. When did we sell this asset? Okay. 28. February 06. Okay, cool. So again, we have 1. Let's do that in a different color. So again, we have 1, 2, and 3. Okay. Right. So for the first, we are saying 13,920. Sorry, 20 times 20%, 0.20. And that gives us how much? 2784. Okay. And the next 12 months is going to be the same calculation. Okay, so I'm just going to write it out though. 0.20. We get the same thing, 2784. Okay, then here, how many months is that? September, October, November, December, January, February. 600%. Okay, so 6 months there. So 13, 920 times. So can you now see? I don't know if I said it with this group, why I was saying, if you get straight line, oh, sorry, I forgot to apportion it. You should be very happy. Okay, because can you see how easy now your calculation for depreciation? The only place where it gets a bit tricky is now apportioning it. Okay, so you need to make sure that you get your months right. Okay, that's the only way then you might get it wrong. Okay, so that's basically half of the 2,784, which is how much? Uh-huh. Okay. So, yes, I just want to hear what she has to say. Chances are that would be too much focus on maybe unless they gave you two short questions, but that would make sense for a test because in the test maybe let's say they're only testing you in one. You wanna? Sorry, what were you saying? I was just making sure that. Okay. I thought he was answering your question. That's why. Yeah. Oh, you're good. Okay. So, guys, this is another reason why I'm saying you need to practice these things, because that counting, makes sense when we're together. Like, oh yeah, 12 months, 10 months, 6 months, whatever. But can you see? Because this is just if we look at here, like for instance, here I said 31 August 2004. All right. And then obviously moving into the next financial year, all right, it's the same as if I had put here 1 September 2004, okay, because that's just literally the next day. Does that make sense? So in accounting, you'd still be saying September, starting at September, then going to October, November, etc., etc. Okay, so just make sure on that front. So what do we get here for the last depreciation calculation? 390, 92. Now, what's the total depreciation? 960. Thank you very much, sir. So I'm just going to say AD for accumulated depreciation. Okay. Now, since we're here, we might as well also just calculate whether we made a profit or a loss on the sale of this asset. So to do that, we know it's selling price minus your carrying value to get whether we made a profit or a loss. Okay. So we sold this thing for how much? 7,714. Okay. And then minus the carrying value, which we know is going to be this 13,920 minus your accumulated depreciation, which is a 6,960, okay, which gives you what then? 754. Okay, do you guys agree? Now, is that a positive or a negative 754? Positive. Okay, so this is a profit. So this is a profit. Okay, cool. So now we've done all our calculations. We're happy. So now let's obviously record this. So remember in our steps, first thing that we want to do, we want to remove the cost price of the asset we just disposed of. So the cost price, so we're going to then say, okay, again, asset disposal is going to be debited because we're going to credit the equipment account. This time we're dealing with equipment. So then then equipment. Let me zoom in now. So we know this is 13,920. Am I right? 13,920? Cool. Then step 2A, remember, because we disposed of this asset in the middle of the year or during the course of the year, 28 February, right? So we then have to do the depreciation adjustment. So we know that we're debiting depreciation and we're crediting accumulated depreciation. Okay? And so basically the accumulated depreciation, that we had for that last period, all right, for the 6 months, right, was the 1,392. Okay, so that's what we're plugging in there. So 1,392. 1,392. Now that we've done that, we can now go back to our usual process where we then remove accumulated depreciation on the asset we disposed of. So we then say we're going to debit accumulated depreciation, all right? And this is on equipment. Okay, and that was, now this is the total accumulated depreciation that we've had on this asset, which we did calculate to be that 6,960. Okay, and you know that then we're crediting asset disposal. Hmm. There we go. Just wanted to neat that up. Okay, then step number 3, remember we're recording the sale of the equipment. So we know that this was sold for cash, was sold on credit, okay? So again, we have a debtor, somebody that owes the business, debtor control, and if you want, you can put that debtor, the name of that debtor in brackets. I don't know if they put the name, did they? Or who we sold to. Nah, I don't see anything. Oh, Puma Dealers. Okay, if you don't do this, don't worry, you won't lose marks. And that was for how much? 7,714. Okay, then obviously we're crediting asset disposal. Okay, so I hope by now you're realizing, this is the last depreciation question that I'm going to do with you guys. I hope you're now realizing that the real challenge about depreciation is really just getting your calculations right. Once you get those right, then it's just about following your process in terms of inserting the information. Then you're home and dry. Okay? Then step number 4 is now recording. Did we make a profit or a loss? And we made a profit. So what are we debiting? What are we crediting? Think about it. We on sale of equipment, right? And we, no, didn't you just say we credit profit on sale of equipment? You said that, right? Yeah. So if we're crediting that, what's going to happen to assets? 100%, 100%. Okay. Again, profit is an income. We're making money. You know, whenever we realize an income, what do? We credit that income account. Okay, so we're crediting profit on sale of equipment. So profit on sale equipment, and the profit I believe was 700 and something, 754. 754. Okay. And then obviously then we're debiting asset disposal. We finished our disposal in the journal. Okay. Right. And then obviously did we calculate this correctly? Yes, we did. Okay, remember at year end we also had so we dealt with the disposal first, but remember at year end we also needed to account for the depreciation that happened on the equipment that we kept. And that's what's happening over here. So remember we were saying, okay, what was the depreciation on the equipment? Was that 16,240 that we calculated? Okay, we know whenever we record depreciation, we then obviously need to credit accumulated depreciation. And then we know that we're at year end. Okay, so we need to close off the depreciation account. Okay, because remember depreciation is an expense, okay? Not cash flow expense. So obviously we are then crediting the expense account depreciation, 16,240, and then obviously we are debiting profit and loss account. So that is what that is all about. Okay, and then obviously I've just left this information in here because at this stage now I hope we should be fine with what we then need to do thereafter. Okay. So there's your equipment account. Okay. Okay, sorry, this should be like this. Okay. Yep. Okay, yeah, so things are not exactly all in order, but you guys will neaten it out in your perspective. And then there's your asset disposal. And then there's your profit on sale of equipment. Right. Asset disposal. It's a negative asset. Sorry. Asset disposal, sorry. Asset disposal is just actually a temporary. I wouldn't say it's a type of account. Yeah. We just use it to get rid of it. Purchasing account, we look at it as an expense. Oh, you mean profit and loss account? Yes. Profit and loss account, yes. Are there any questions from your guys' side? We're all good? So, yeah. And let's call it a day. Guys online, any questions, thoughts from your side? Okay, all right. So we're done for the day, and do enjoy the weekend. I guess I'll only see you guys in 2 weeks from now. So do practice. Make sure you're on point. All the best with your exam. Okay. I will see. I probably will try and do 1 or 2 ice tasks for you guys if I see it necessary. But yeah, like I said earlier, we don't have that much time. So that's the only concern that I have. All right. But enjoy the weekend nonetheless.